Facebook will be added to the NASDAQ 100 on December 12th, replacing Infosys. The SEC is investigating a sale of shares by Big Lots CEO Stephen Fishman before a news release led to a decline in the stock. I'm Lindsey Bell, and the morning call starts right now.
Good morning. I'm Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Lindsey Bell with The Street, and together we bring you the morning call. Stock futures are pointing to a positive tone this morning. Scott, after the last 2 days of action, how are you going into today?
Well, the last 2 days of action worked off some of the overbought condition. We came in 2 days ago, I think the oscillator was plus 60, plus 65, which is always an area where it's very hard to or tricky to initiate new positions. So you had to be patient, let the market come in. Yesterday, was a second down day, but it was really, kind of lethargic trade. But we did hold higher. We held above that 25% Fibonacci retracement. And today we have a positive tone. So we are doing some work at higher levels, but there really is a lack of momentum in this trade right now.
Let's look at the chart of the S&P 500 and where that Fibonacci retracement is. Okay,
so if you go to the chart of the SPX, you'll see that, first time we went to the 50-day moving average, we somewhat failed. We had a really nice move from November 16th. Here was that outside day. Here you had some follow through, held higher, continued. This is when we consolidated the first time and held in there and continued. Then, 2 days ago, like we just said, you had a small outside day, a day that I know, guys and traders took off some risk because you never know what it's going to lead to. But yesterday wasn't much. Yesterday was a small little down day. I actually thought maybe we'd get even more downside, but it didn't happen. There were some trades to be put on, but you had to be very, very selective. Like if you look here, we held the 10-day, we held the 25% retracement. The longer we go sideways above this, just say 1403, I'd say the higher the probability that we do take out this 1419, but there really isn't that much room until we get to bigger resistance. So I think traders are just a little concerned that there really isn't that much meat left on the bone, so to speak, to be long. But if you've been trying to be a little short, you're a little bit probably frustrated because there hasn't been that much downside action. So, I think a lot of market participants are in limbo.
Yeah, no, it certainly has been frustrating. It's been a market of the haves and the have-nots. It's a confusing market right now. If we get into the trenches, we'll look at some of the mega large cap tech stock names here. We know that IT spending has been slow across the board for many companies given the uncertainty in the economic environment, and corporations are just waiting to see what happens with the fiscal cliff. If we first take a look at IBM, now this is a company that's been transitioning to more services and software business away from the hardware business, which has been a great move. A lot of people like this stock, but if you take a look at the price, the stock has been, it's below a lot of its trading averages, but there's a bullish flag there. So this is one bet that I know that Warren Buffett has. Do you think that the bet will play off?
I wouldn't say it's a bullish flag, but it's consolidating down here, and it's like there's a descending trend line that at least we could use as a point of reference. But overall, like you mentioned, it's been a tougher environment for these mega caps, especially if you have a lot of exposure to Europe, a lot of exposure to the public sector that might rein in their spending. So, if you look at IBM, at the highs here, which we don't really take stock into earnings, you had a big gap down, and then look at the size of this hole. Okay, never got filled. There was never demand. So this downside gap controlled the movement of this stock as it's continued to the downside. So we just had a really nice move off the lows from November 16th, and look what IBM did. It had a small move. So I would say traders are watching this to see market composure. Slightly positive that it's holding this minor gap here, but I don't think anyone's going to get excited about this or you'll see any upside until it takes out this 194. If you're a fundamental person, you're probably buying a little bit into this, dip. That's fine. A trader, I don't think, has it on its radar unless it gets above this. But overall, still below a lot of moving average, still a lot to prove. If you go to the weekly chart of, IBM, it's just you have to be a bit careful. If we come into next year and IBM takes out this area, next support really comes in down around here, and then really all the way down to 160. So let's hope that this big wide range bar on the weekly that hasn't been taken back, that is in the bottom 20%, does not control the stock next year, but it might. So just don't fall in love with names, fall in love with the price action. And right now, IBM to me has a lot to prove.
Cisco, on the other hand, has had a nice rally since reporting a solid earnings report in mid-November. Now, this stock, a lot of people think, is undervalued. It seems to be consolidating around this $19 range. So what's the trade here?
This has just been a very specific trade. Some quarters they miss, some quarters they don't. Overall, in the last sweet spot, it's been stronger. If you look at the chart of Cisco, I don't think many people were in love with it, and then you had this nice little gap up here. So you know what I talk about with gap ups, as long as they hold, you could trade versus them long. So now is your gap up, and it was, kind of, it wasn't at the dead lows like it was in July, but there was not much priced into Cisco doing well. So here it gapped up, holding higher, started to trade. It's been just, trickling higher. It's coming into bigger resistance. So I think, it does have some room to about 1950, and then at that particular point, they're going to have to perform again next quarter for any more upside. So hard to chase any of these mega cap moves from 1650 up to 1950. I'd rather see, sell a little bit of strength there.
Oracle has had a similar move since mid-November. It's been moving to the upside. Yesterday we heard them announce an accelerated dividend where they'd pay 18 cents per share for the fiscal quarters in 2013, the second, third, and fourth quarter. So positive note there. But it's stretched from its moving averages. So is it a time to initiate a buy here?
I think guys that bought it, we had the descending channel. I talked about it. I said it's been acting better. Mega caps also aren't all created equal. You go to the chart and you will see, you had a nice downtrend here, came into, the 200-day moving average, just like a lot of other stocks, but reacted well. We like tight patterns. This tight pattern broke above and then tested it, stayed above it, and now it's just going higher. It's following the 8-day moving average again. That's nice. So I think at this point, if you're long Oracle, it's giving you every reason to stay with it. It's making it nice and easy as far as the entry. This really was your entry. Now I think you just let it go. Maybe the longer it stays above this, 31.80, you might get another trade as it flags here above this recent high, which is about 32.50, and then you have to see how it handles resistance. You go to the weekly chart of this, and yeah, it's still on the weekly chart. It's acting a lot better than the mega caps. I know it was on a clear-cut run way back when, but it's it's taken its time. And at this point, if it can get and stay above this 33 into the new year, this is something that needs to be on your radar still.
In the semiconductor space, Intel, it's been a weaker name, but is looking interesting here. Yesterday, it crossed its 8-day moving average with a 2.2% gain, but today it got downgraded. So what do you think the action is going to be here today?
It's funny, I think the same company that downgraded it today upgraded it at 32. So it shows you how much value they add. But anyway, I won't get into that. This has been a sell all year, right? It's been a sell all year. Technically not performing well. They were obviously the PC market has not been the place to be. It's been the tablet market, and they've not had a big presence there. It's been ARM Holding, it's been CRUS and whatever. But every now and then there's a laggard trade setup. So that's why I'm long it. I talked about it yesterday. You look at the chart here. If you weren't involved during this process to the downside and you had every reason to be out of it, especially, you had your breakout failure up here, then you had a lower high, another lower high, and then really the last line of defense, if you were using stops, was when it broke below this support. Broke below, never came back above it, and look, pow. But every time it's tried to rally since, it's failed. So the question is now here at this lower level, if you want to trade it versus this zone, I think it's worth a try. I'm in some. I think if it goes positive today, that's another constructive sign. But really, it's going to have to start taking out like this 2020. And I don't think it's a blockbuster trade. I just think if you have a portfolio approach and you want to have some other exposure, that this one down here at least is defined. You put a stop in at the low, like from this chart. I'm in tier 1. If it gets above it, I'm only looking for a trade. But if it starts to falter, I'm not married to it, and I'll just let it run its course and get out of the way. But this could be a January effect type stock where it's been so battered and bruised, maybe it lifts because tax law selling thereafter. They're talking special dividend. Then you're also thinking that someone said that maybe Apple will use some of their chips for some of their next generation iPads. So there's like 3 potential catalysts there. I'm not in love with it. It could be a targeted trade.
Well, that's something for investors certainly to think about. We're going to take a quick commercial break, though, and get back into it after this.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Welcome back. We're going to get into it with some stocks that are in play. We'll start with Toll Brothers. These guys reported earnings yesterday that were pretty impressive. They had some amazing stats. But while the stock was up 5% in the pre-market, we saw a lot of selling during the day. Now, it has rewarded investors with 60% upside in the last 12 months. A lot of people might argue, though, that this stock is overvalued. So from a trader's perspective, is there a trade in this? Maybe we need to see more downside?
I think a lot of guys were talking about it yesterday with the potential market weakness. A stock like Toll, a group that's been a leader, the XHB, the home builders have been the place to be. So when a company actually performs and has a great report, you would expect it to hold its gains and act constructively. Instead, they sold it off. So that was another reason why I was a bit more cautious yesterday. If you look at the chart here, you'll see you had a nice tight pattern. It wasn't like it was trading near the highs going into earnings with a ton priced in. Yes, it moved up 60% this year, but it's been pretty methodical. So for it to, gap up and be sold right back into it, a little bit of a negative sign. Usually, you have to really watch out what that leads to. And if you're holding Toll and all of a sudden Toll starts to break this mid-level support, I would stop yourself out. That's your stop there. I don't like when, a stock like that does that. If you look at the overall group, XHB, you'll see still holding higher, near the old highs. You have that same type of day right there in the actual indices. But I would just be careful because coming into the end of the year, you really don't know what they're going to do with stocks. Usually strong stocks, close stronger. But with the way this fiscal cliff talk is, who knows? Maybe strong stocks get sold because people don't want to pay taxes on them, when tax rates go up. So that's why right now people don't know exactly what to do because a lot of the relationships that we're used to each year change. Where strong stocks end stronger, so they could be on the books and they could look good. Sometimes weak stocks that have been thrown out, lift in December and January because they've already taken their sells on it, the extra pressure. So at this point, just make sure you watch and monitor your stocks closely, know your time frame, and I would just be a little lighter.
One to keep your eye on then too is also 3D Systems. It's up 180% in the last year. Might be one good to take your profits if you've been in it for a while. But these guys make the 3D printers. This is a very popular thing nowadays. Everyone wants their own 3D printer. But looking at the stock, what levels of resistance should we watch?
Well, what was interesting about this group is, a lot of people have been talking about it. It's been IBD. It's been a highly rated group. And then finally, it had its first I would say harsh, or first in a few times, harsh move to the downside. So if you look at, Triple D, this was when it tried to break out again and then it failed. Anytime something tries to break out and get momentum, if you're a momentum trader, you leave. And what happened is you had day one to the downside, your outside day, day two, day three. So for me, I gave it a try, and it was a decent cash flow trade. I was looking for a red dog reversal, and our price point sheet, we listed it at, $42.50, closed really strong. But for me, I'm not going to, if it opens up today with the futures, I might just sell it, and that was my trade. But overall, this group was a surprise group coming out, acted well, near the highs. You go to your weekly chart of this stock, and it's something that has been stronger, and look where it came from. So this has been a new stock that's, for a stock picker who saw this industry coming, great. Yesterday, you look at SSYS. I know Sperling was, looking at it, was pretty enamored with it. It too had a breakout failure. So yesterday was your calculated bounce, but I think you sell it into the 72 area because if it doesn't take it back, it could turn lower. And anytime you get a 3-day harsh move like this, you just have to take notice because sometimes it leads to more downside, especially for a group that worked out so well.
Facebook is one I know you've got your eye on. You're short it. Yesterday it saw a little small downside after the reversal on Monday. Where are you putting your trailing stop in, though, your short position?
This is very good trade management, okay? Because 2 weeks ago I talked about being long it, tier 1, 23.75, tier 2-ish when it got into the gap above 24.25, and then it had a really nice run. Went into almost 29. So on that outside day, okay, which we did see, it was a great spot to take some profits. I did get short that day, and intraday, I always have a lot more on than I have overnight because you never know what's going to happen, like per se, getting ahead to the NASDAQ 100. So with that said, I have about a third left on, so that's why we do trim and trail to the long side and also cover and trail to the downside, so you feel comfortable, you book some money, but then you stay with the trade. But if the trade doesn't continue, you get out of the way. So if you look here at the chart of Facebook, you will see, here is when it triggered to the upside. Okay, tier 1 here, tier 2, then you could have scaled out of it into the run. Here's your outside day. That's when I got rid of the long and I flipped short. Entry was right around 28. Yesterday, you had a small push. It was very small push below 26.98 to go as low as 26.68. That's where I covered some, but then I stayed with some. but I didn't have a lot of size because like, you know what, look at this green bar. You didn't see follow through, fall apart selling. So you just see pause selling, and it's still above the moving average. So for me, I'm going to put, most swing traders would probably put their stop at 28.88 when it takes out this high. For me, I'm probably going to put my stop if it gets back above 28 and just, kind of flatten out versus my point here. And I wanted to buy Facebook. I just thought Facebook would be coming into 26. I'd get an easier trade, an easier flip. Didn't happen that way. So I'll salvage a trade, measure the action. Right now, I think it's right around, 27.90. So we'll see.
Okay. Bank of America has seen some really nice upside this year. It's getting close to $10. Do you think it breaks through that level?
It'd be nice. That would help my day today. So it is one of my bigger positions. I've been trying to add to it in the 990 range, trying to get this breakout above 10 because I think it'll be clean to like 1025, 1040. If you look at the chart here, it has been showing relative strength to the overall banking sector. It's above all the moving averages, near the recent highs. You look at the XLF just to compare relative strength just to the group, and you'll see this was the recent highs of the XLF. It's in a mid-level box. So that's showing you that there is some extra demand for Bank of America. So you go back to the chart, if you're in tier 1 and today's the day you get a heavy volume above 995, perhaps you add to it. You add to it and then get a nice trade up to 1030, 1040, sell some and then hold some, because you go to the weekly chart and you'll see Bank of America, really no big resistance. You have some resistance here around 1091, which would probably be a few day move out of this breakout. But then ultimately 12 to 14 for Bank of America Merrill Lynch is not, I don't think, out of the cards for next year. And right now it's a nice tight setup, so it's worth keying on even today.
All right, let's get into some quick hits. We'll start with Apple. It's been down for 3 days. What do you do?
What do you do? For me, I like to be perfect with Apple, but you can't be. It's such a big, story stock, and everyone in the street's so emotional about it. We had that reversal on November 16th. It was a great hold for about a week and a half. I think from 522 to almost 588. It was on the virtual trade floor green, so a lot of guys got involved, made some money there. And then I thought I was, sold it well, kind of cute. You look at the chart here, you'll see that, sold it, I think, right around on this day. And then I was just trading it here, and then I had no position yesterday, 2 days ago. I didn't have any position overnight, so I didn't have to take the pain of yesterday's action. But I've said, I'm going to try some, into this support area, into this 572, 574. Same way, I had a move here, held, and then continued. So this time, it didn't really trade off this area with any kind of force. And now today, it's opening down $6, $7. I'm not exactly sure why. Some are saying it's trading down because they didn't get the China deal that they wanted, the China mobile deal, and Nokia got it. Some are saying the senior VP sold 15,000 shares, but I'm sure he owns a hell of a lot more than that. So there's a lot of people talking. But what I will say is today, if you didn't chase it into the 590, 594 resistance, or if you sold some strength and you're flat today, there could be opportunity that on day 3 to the downside, coming in to look at the chart one more time, the potential 21-day moving average, if you go back to the chart, you will see that this, I think, is very important. In order for Apple to really become, stay on my A list of trading it every day, I would think that it holds this and closes off of it. Okay, and then what we'll do is we'll just, change the speed here. But as of right now, it was a very clean trade all the way up here, and now, it's probably a little bit noisy. So as of today, if you're a momentum Apple trader, you want to see this thing go from negative to positive today. You don't want to see it go from, down 7 to down 12, because I think sentiment here will change very quick.
All right, let's look at gold. It fell into its 100-day moving average yesterday, but this one has been out of play for a while.
Yeah, gold and silver have been very erratic. A lot of the moves happen overnight. It's opening up today. So let's just go real quickly to the chart. I won't get into it that much. You did have it hold this trend line that I drew, I think, yesterday or a day before that. So at this point, looks like it's going to fill the gap. I would say, 166, if you happen to be long into it opened down and closed off the lows, I think that 166 is a place to, take some off.
Yahoo trading at highs, feels a bit stretched. What do you think?
I don't know. It's kind of stretched above. We talked about 1660 after earnings when it broke above that intermediate range. But if you look at the chart here, it's holding higher. It's holding the 8-day. It was one of the first to bounce yesterday. I'm actually long some Yahoo, and I think that there is a chance for it to trade above this 19 area and continue. If you look at the chart, reason why I was looking at it for a while before this happened is because of this. I love channels because it shows you accumulation, institutions getting behind it, and at some point it typically goes. And here's where it gapped above it, stayed above it, and then this was your meaty trade. So up here it's just more of a base on base trade. And I do think if you go to the weekly chart, it's a kind of interesting that there's a bigger channel here, a bigger channel if you go from the downside of this all the way to the upside of it where we're coming into. And if it does do some work up here, I think that there is a possibility, I know it got upgraded, that the next big resistance is around 23, 24. So this is something I think you'd stick with and something for next year. It could be a good first quarter performer.
Yeah, keep our eyes on that one. Well, that's all we have time for today, so be sure to check in at the end of the day with Scott and the T3 Live team for the daily recap.